This me getting shaved off on Saturday. Thinking about it. Maybe.
Okay, so I think we're ready to begin. My name is George Mihalos. I'm the senior analyst covering payments over at Cowen, and it's my pleasure today to be introducing the Paysafe management team. We have with us CEO Phil McHugh, who, by the way, is celebrating a birthday today and talking about payments. So I'd be remiss if I didn't put that out there. Phil is going to walk us through a handful of slides, and then we'll hop right into the Q&A portion with CFO Izzy Dawood joining us as well. So, Philip, over to you.
Thanks, George. Great to see you. Yeah, what I'll do very quickly, I'm going to focus on just 4 quick messages, and then I'm going to give 2 customer examples of how when Paysafe's assets come together, why do we win deals with fast-growing, disruptive players in the market. So I think that the first message we have is Paysafe has been around for well over 20 years. It's scaled, it's highly profitable, it's truly global, has a really consistent track record of consistent growth, both organically and integrating deals inorganically as well. So that's kind of the first message to plant on Paysafe for those that are less familiar with it. The second message, and this is really probably the most important piece for me, is how do you plug into Paysafe? We talk about being a true specialized payment platform, and we win when we combine 4 pieces, and we'll bring that to life with some examples. One is ease of connectivity. How easy is it to integrate into Paysafe? The technology is very good. We've spent a lot of time and effort to really consolidate platforms. We've recently consolidated our enterprise sales team, so all products are sold by one team. It was interesting to hear David Ossip talk about that as a classic kind of Bill Foley playbook, and that's absolutely the direction we've gone in. So you can sell all of the different solutions together. 2, we provide more ways to pay. We are not just a traditional card processor. We have a very scaled global gateway. We have a very scaled digital wallet that gives you very powerful pay-in, pay-out capabilities. We can make cash digital. It's a small but very valuable use case for our clients. More and more, we're really building up our open banking or account-to-account capability. We think that's a fast-growing payment rail. And over time, we'll certainly, with our KYC and our AML capabilities, we see crypto as a potential form of payment, not just a form of investment. So how do you get all the ways to pay so a merchant or a client can simply just sell more? The third piece, though, this is where we really start to specialize, incredibly deep risk and regulatory management. We have over 300 people in risk and compliance. It's quite unique for a payment company. Very strong regulatory management, understanding of the online sports betting world. Very deep bank relationships, so we can take on harder to get to industries. And finally, we're not a generic player. We like to go deep into industries. We're the leading player in sports betting and online casino and poker. We really like the crypto and NFT space. We think that's going to be very disruptive. Digital goods like video gaming and travel, where there's always a risk component, either on the credit side or on the compliance side, where we can differentiate as well. So those 4 pieces, when we combine it, we win the deals that we want to win. The third key message is we've been on a journey. Lots of assets have been bought over the last several years. I came in 2.5 years ago, and we've embarked on really driving fast tech platform integration and cost management. And again, this is another thing in the partnership with Cannae in terms of the discipline and the focus. Single API now to integrate all of our products, single risk platform, well ahead on moving from basically 0% to well over 70% of our business now in the cloud, and we'll complete that journey in 2022. That gives us incredible scalability that we didn't have before. The risk team has really grown, driving down cost, the cost of credit loss and fraud with less people. We're on a cost plan. We've beaten that for this year. We'll take those repeatable costs into next year, and we'll add a further $20 million of cost takeout as well. And then finally, integrating, so executing there. We bought 3 companies at the end of the summer. 2 have closed. SafetyPay will close in January. But to give you an example, Pago Efectivo closed 60 days ago. Technology is fully integrated. 16 of our global clients are now trading in Latin America, and we did our first transactions with one of the largest online sports betting companies just yesterday, from close to yesterday, 60 days. So feel really good about how the team is executing at pace. And I think the last message that really matters to us at Paysafe is North America iGaming. That's clearly one of the fastest growing digital commerce markets that we see in the world. It's growing fast as it is, but it's just early innings. Florida, California, New York, Texas have not even begun. So there's lots of markets yet to be open. Canada is just opening now with Ontario. We're the #1 player in Canada. 100% of the regulated gaming currently goes through our gateway. 75% of the operators in the U.S. are plugged into us, so we feel good about that. We have a nice pipeline of more clients and states that we'll be announcing. We're seeing eCash really start to grow. So we've grown mainly through gateway and card. Our eCash product is starting to get some competitive takeaways. Our digital wallet continues to grow. It's from a small base, but we really like it. It's higher average ticket, repeat jumbo transactions for our VIP players. So we're building the proof points to show that we can beat existing products in the market. We've just got to get it to more tier 1 players and get scale behind it. And then finally, while we're the gateway, we have 2 acquirers, both FIS and Fiserv. We will double the amount of back-end acquirers in the next 6-7 months. So we're really expanding that. That gives us flexibility, and it gives, more important, our clients a lot more choice and value as well. So those are the 4 big pieces if you're to summarize what's driving Paysafe value. And let me just bring it to life, George, with 2 examples. The first one, this is a signed deal, not publicly announced. It's a major gaming brand. It's a well-known brand in the U.S. and globally. They have both online gaming in several states, as well as in-casino presence. Besides that, they needing card processing solutions, they have a real cash problem. They've got real cash usage in some of their physical sites, and they want those customers to be plugged into the online world as well and have a seamless kind of app experience. And so that was a big issue. They needed card processing, but they needed more than that. They needed a cash solution. They need global support, and they do have a pretty big VIP population where our Skrill wallet could really support them. And so that's a complex need, and we've won the deal by having deep relationships in the industry. We're ready on day 1 with all of the regulatory needs in all of their states and their emerging states. Our eCash solution we took away from another supplier, able to put it all into a single API integration, and they really like the VIP capability and see that as a day 2 opportunity to build on the Skrill platform. So we're really excited about that. This is a competitive takeaway in New Jersey and Iowa as well, where we're taking volume from an incumbent. So we're pretty excited about the combination of how we win. The second example is another signed deal, but to be announced hopefully in Q1. We're very active in crypto. We have 40 cryptocurrencies that you can trade in the Skrill wallet. There's been some nice growth in there. We want to see more from that. We also process cards on about 7-8 platforms, crypto exchanges. But we're starting to work now with the crypto exchanges in a much more holistic way, looking at their full end-to-end needs, bringing all of our products together. And in the example here, we're dealing with an extremely fast grower, very disruptive, very scaled. You're talking 30, 40, 50 country market presence, very demanding in their user experience and their technology. So you have to be able to keep up with them on that. 2, extremely complex risk and regulatory needs. They've got to plug in to e-money licenses. They need help and support on KYC and AML services. They need access to not only card processing, our Skrill wallet, and our eCash. They want access to real-time banking. They want IBAN accounts to do bank transactions at scale. So they want all those multiple ways to pay. And what's great is our team really work very fast. We have the card processing. We have single API, give all the products. But we really started to take our wallet platform and look at the capabilities and allow kind of API connections. So they can take our wallet capabilities. They can still have Skrill fund in, but they can take lots of our wallet capabilities and create almost an embedded finance solution. You plug in, you can do your own pay and payouts within your own app. You can access our EMI license, our KYC service. You can access real-time banking, as well as cards, PaySafe Card, and Skrill. So that combination of risk capabilities, opening up our wallet to create embedded finance, and plugging in all those payment rails really made a difference in a highly contested client. So we're pretty excited about this. We think this is going to be a pretty nice emerging area for us. So that's the story, George, in a nutshell.
Thank you for that overview. Obviously, a lot to unpack. So why don't we just start off on the consumer side, because I think that is certainly a key differentiator for you guys relative to a lot of your other payment processing peers. And I guess focusing on the wallet that you talked about there, Phil, how do you think about positioning Skrill NetTeller versus some of the other more, popular wallets that we hear about, the PayPals, the Venmos, the Square Cash Apps, and the like? How do you position your solutions relative to those? Those guys are always talking about the super app, for example, and all these different functionalities. And how should we be thinking about the products, say, U.S. versus Europe?
Yeah, no, it's so I think the first thing is, having a consumer base as well as a merchant base absolutely makes a huge difference. Well, we have 15 million active customers across PaySafe Card, Skrill, and NetTeller. You can introduce that into a merchant, especially because they're focused on trading and gaming, and that makes a huge difference. You can do co-marketing. You can really work with them. So that makes a big difference. Within the pure digital wallet space, the PayPals, the Cash Apps, the Alipays, the super apps, we're not going to try to compete at that level across this generic super app space. The amount of marketing spend involved in there, the profitability of some of the people trying to follow, it has extremely long and I think questionable road. So we're very focused in industries. Skrill and NetTeller are absolutely focused in the gaming and in the trading world where there's a lot of overlap with customers. They're larger ticket, they're sophisticated, they need to fund from multiple countries. VIP support makes a big, big difference. Working with banks and managing fraud is a higher level than in a generic app. So these are the things that we do that also work with our clients, so the merchants as well as our consumers, to make those products attractive. In the U.S. market, it's a very similar playbook. It's obviously from a smaller base, but we looked at that business. So we're working on the Skrill brand only. We're focused on instant funding, higher ticket instant funding, more ways to pay than to fund in versus, let's say, a PayPal in the market. And again, VIP support and servicing. So those elements work. And what we're seeing today is higher average ticket. We're on the top end of conversions. We're seeing repeat jumbo funding into the wallet, which is good. So the same customers going back, and these are jumbo users enjoying it. So we've got 11 operators today. What we really need to break through is really work with the tier ones to really promote it. So we're building out the proof points, having the conversations, figuring out where we are on their dev cycle to plug in. So it's going to take time, but we really do like where it's going. And then the third piece is what I mentioned earlier, really exposing our digital wallet capabilities as a platform. You've heard Alight talk about it, right? You heard Dave Ossip talk about it at Ceridian. Very similar capability. We KYC millions of consumers globally. We have a very, very sophisticated EMI license network. We have lots of plug-in to APMs and ways to fund. And we can sell that with our proprietary brand. But more and more, we're seeing clients, they want our gateway, but they want that wallet platform as well to make a difference. And we think that's another interesting difference maker in the wallet world.
Is it sort of safe to say that, focusing again maybe on a handful of industries, you're sort of creating a two-sided network, merchant and consumer coming together? That's the idea of where you're going with this.
Absolutely. That makes a huge difference in terms of being able to drive value. And ultimately, at the end of the day, it's got to work for the consumer. And but the biggest metric for me, are we helping our clients sell more? And if you can bring which drives more signups, it's a virtuous circle.
Great. Phil, you talked about sort of a reset in the wallet business, making some changes there that will improve the growth rate and sort of the optimal approach for going to market. Maybe you could elaborate that a little bit and maybe talk a little bit about how you're thinking about long-term growth rates for that specific segment? I know it attracts a lot of attention.
Yeah, no, obviously that's been the story, right? Both good and bad. So, we had a pretty big reset in Q3. That was a tough story. It's definitely not a story where we wanted to be. But in some of the more mature incumbent markets where we need to be closer to the client needs. And that's what you saw with the reset in Q3. So, the Q3 earnings, we talked about reset and respond. On the reset side, I'd really say there are two things. One, we did a, market by market, client by client review, took a pretty conservative, grounded baseline to baseline that business, and that's what we talked a lot about in Q3. Two, we reorganized. We brought in new